Throughout 2025, everyone has been looking at the altcoin market, trying to make the assumption that yes, we are about to see alt season. And listen, I'm not saying that I wasn't one of them. In fact, yeah, we should have technically seen an alt season happen this year going off of previous cycles. And I think that's the big mistake that myself and many others made this time around, thinking that this cycle was going to be identical to previous cycles. And it's only because we had two cycles to go off of anyways, which was the 2017-2018 cycle and the 2020 into 2021 cycle. Yes, previous cycles did happen, but they were not similar to those two times. And also, those two times that I mentioned, we have that on the Bitcoin dominance chart in a clear view. This time around, we don't really have a lot to go off of because, again, we should have technically witnessed a similar move to 2021 and even 2017, 2018. Now, during this time, is, all hope lost? Will we ever see an alt season? Are alts just cooked? Is this market topped out? Is this market done? Now, I previously made a video saying that I'm cautiously bullish going into 2026 just because we are constantly seeing bullish headlines. Now, does that mean that I think that 2026 is going to be a terrible time for crypto? No, absolutely not. I'm just saying that we need to be a little bit cautious. It's not the fact that, we shouldn't be bullish. No, I said that I'm cautiously bullish. I'm still, very bullish on the market, but we need to make sure that we have our guard up, ensuring that we know when something is, going off the rails. Specifically, major emotions. Are we seeing euphoria in the market? Are we seeing crazy price predictions? Are we seeing this? Are we seeing that? And then kind of base our case around the market being possibly topped out or not. But I'm bringing all of this up because we have here from Coin Bureau, is a rebound due for altcoins? Others against Bitcoin is bouncing off the same long-term support that marked cycle inflection points in 2016, 2019, and 2021, levels where alt season began. Now, again, looking at these charts almost every single time that we've looked at these charts and we tried to base it off of the past, it gets completely invalidated. In fact, this chart alone is technically drawn wrong. And the reason why is because the trend line should start from that July 2019 candle bottom and going off of the 2020-2021 candle bottom. So we already broke this chart. This is invalidated. But does that mean that altcoins are cooked? No. Let's go over a few things. Number one, let's talk about how every single market is at all-time highs or hit all-time highs recently, while crypto is doing nothing. The S&P just closed above 6,900, on pace for the 7,000 level, which, by the way, if you guys have been watching my videos over the last couple months, I've been talking about 7,000 being the main target for the S&P, and it seems as though that is going to be hit. Now, with this, we also have silver going absolutely insane. This is a crazy, crazy time. I mean, if you look at the silver chart, this is what it looks like. I mean, you would expect this from crypto, but from silver, it's wild to see this type of move. Now, I've also mentioned going all the way back to 2022. You guys can go back and look at the videos as well. Yes, I'm a very, very big bull when it comes back to the commodities market, because I do think that silver and gold is a great hedge against a, systemic reset or a systemic collapse. And I do think that at some point in time, we will see, a crash at one point. And that's going to also cause gold and silver to go crazy. And, we're already kind of starting to see the early signs of that. Now, we also witnessed gold go absolutely insane as well, hit over 4,500. This is new all-time highs. And during this time, crypto is kind of taking the back seat because all of these other markets are seeing such crazy price action, and that's bringing FOMO with it. So everyone is kind of avoiding crypto because during this time, crypto is very boring. So they're looking at gold, they're looking at silver, they're looking at the S&P, and that's what retail is buying. They do not care about crypto. And I think that that's very clear by looking at the Bitcoin versus NASDAQ chart, which got posted on the 22nd from Cointelegraph. And we have here Bitcoin has broken its usual correlation with equities as the S&P 500 hit record highs and tech stocks surged 16% this year while Bitcoin lagged behind. Now, everyone will look at this and they will say the crypto crash broke the market, because we do have the day of the crypto crash on the chart here, and we can see Bitcoin just collapsing. But I don't think that we have fully decoupled. I don't think that we have had like a crazy shift in the market. I don't think that this broke the market. I think right now, yes, the correlation is a little bit lagging behind, right? Because again, you know, we typically see Bitcoin lag behind anyways, especially even gold. Like if we see gold go crazy, Bitcoin typically lags behind it. But we do know that this year has been terrible for crypto. I mean, the annual performance of major assets in 2025, you know, we could see that altcoins are down 42%, Ethereum down almost 12%, Bitcoin down about almost 6%, compared to the Russell, the NASDAQ, copper, gold, and silver being up massively. Now, that's in the last year. If we go back 2, 3, 4, 5 years, obviously crypto is outperforming all of them, but it's very clear that something is happening here where we are seeing a significant rotation out of crypto into these other assets. Now, that could be because of the crash, right? Everyone got scared. They said, you know what? You know, the hell with this. We're done with this. I don't care about crypto anymore. It's manipulated. We're seeing something happen here that, you know, is out of question in terms of bullish or bearish. I'm going to throw my money into other things like gold, silver, or, you know, even the S&P. That could definitely be it. However, you know, if we're looking at this chart, you know, it's wild to go back to October and see just how Bitcoin, Ethereum, and altcoins reacted while all other markets, especially silver, did completely the opposite. And this is why I do think that there is a significant rotation underway. And do I think that that's going to continue where, you know, just crypto continues to drop? No. In fact, we watched this back in March as well, where, you know, gold was going crazy in March, and we could actually go all the way back to March on this chart. And you could see others, you could see Bitcoin, you could also see Ethereum during that time going all the way into April. Now, gold was starting to go crazy, and then it stalled out in April into May. And that's when crypto started to go crazy, especially Bitcoin. I mean, Bitcoin hit new all-time highs in October. Ethereum hit nearly a new all-time high back in the summer. And that's because markets started to stall out like gold and silver, and that led to a rotation into crypto. This time around, it's not really that different. If we're looking at the total market right now, this is the total market cap of crypto. We have bullish divergence on this chart, very similar going all the way back to March and April, where, you know, again, RSI continuing to the upside while price action was going to the downside. Again, RSI continuing to the upside, breaking over the moving average while price action continues to chop to the downside. This is bullish divergence, and it typically leads to expansions to the upside like we saw back in April all the way into October. This time is not that different. Now, on top of this, we just got one of the biggest updates that we could have gotten around the economy. That supports these markets expanding to the upside, and that's the GDP. Bullish, 4.3% GDP is a solid jump. This marks the strongest growth since 4.7% in quarter 3 of 2023. The US economy is looking bullish as it heads into 2026. Check it out.
GDP, second time around the block, delayed. Third quarter numbers, we're looking for 3.3. Zoom, zoom, zoom. 4.3%. 4.3%. That is a nice jump. And I know many may question day the gathering, but on the surface, this would be the strongest quarter going back to the third quarter of 2023 when it was 4.7. This is strong. 3.5 on consumption blows away the 2.7 we were expecting. That would be the best since the last quarter of 24. On the price index, here's some not good news. 3.8% on the price index. That's much higher than 2.7 we were looking for. EP, second time.
So yeah, I mean, listen, when we think about this, this is extremely bullish going into 2026 because, again, these factors are showing us that risk on assets are extremely bullish going into 2026 because the outlook for the entire economy is also very bullish. This also hints at potential, rate cuts continuing, which I would like to avoid actually. And I know that people will say, what do you mean, Nick? Why would you want to avoid rate cuts? Well, because now if we're looking at things happening here, yes, with the GDP growth, it does demand the Fed to continue to cut rates. We have here breaking. The odds of the Fed pausing rate cuts in January of 2026 surged to a new high of 86%. Fed Chair Powell is about to halt rate cuts again, even as core inflation hits its lowest level since March of 2021. This is from the Kabaisi letter. Now, again, looking into this, you might say, all right, well, with inflation back to the lowest level since March of 2021 and, the GDP growth, why aren't we seeing the Fed eager to cut rates going into 2026? Well, I look at this very similar to going back to 2021. And the reason why I say that is because I made a post on X and I said that people's opinions on rate cuts are typically skewed. Let it be known that rate cuts are typically bearish when employment is slowing due to the Fed attempting to stimulate the economy, which we saw this year. Now, if we do see the Fed pausing in 2026, which most think is bearish, it's actually very bullish because of a few factors. Number one, GDP growth came in higher than expected, showing that the economy is improving. Number two, inflation is also dropping, coming in lower than expected. Number three, we already got 6 rate cuts since 2024, which is a similar setup to the 2019-2020 timeframe, with 2021 seeing the Fed pause. 2026 could be mirroring 2021 setup for risk on assets, hinting at a much larger bullish run. Now, if we do see rate cuts in 2026, does that skew this outlook? No, it doesn't change anything. In fact, if we do see rate cuts at a time where GDP growth is expanding and we also see inflation dropping, then hey, it's even more bullish for risk on assets. It's a win-win scenario here if we see the Fed pause or if we see the Fed cut, because again, all of the factors here are telling us that things are improving going into 2026. If the Fed does continue to cut, it means that borrowing and also liquidity will improve drastically as well. We already started to see liquidity improve. We need to see that continue. Rate cuts just accelerate it more, which would be very bullish for, the entire market. But in my opinion, looking at a few things here, while everyone is starting to get very bearish on the space, especially when you look at factors like this chart, or if you're looking at altcoins and, you're looking at them and saying, all right, well, altcoins are absolutely killed. And then you see the S&P going crazy, you see silver going crazy and gold going crazy. And you're looking at this and you're saying like, why am I even holding crypto at this time? And I want you guys to understand that if we take a step back and we, look at the past, crypto has outperformed every single one of these markets massively. This time is not different in the sense of that. The only thing that is different is that liquidity has changed. And I said this even before, when we have significant events, a trade war, it could be even COVID, it could be any sort of significant event, it changes and affects the liquidity cycle. I'm not agreeing on the 5-year cycle theory, but the main thing that I'm looking at here is that there was never a 4-year cycle to begin with. So the 5-year cycle theory is just ridiculous. The main thing that we're looking at here is liquidity. And that's the biggest thing to focus on. If we see liquidity drying up, it's a bearish factor. If we see liquidity improving, it's a bullish factor. And significant events can change how long liquidity improves or how, short the time frame of liquidity improving could be. So in my opinion, with liquidity improving again, with all of the significant events that we saw in 2025 that affected liquidity, I do think that now it's started to push the liquidity cycle into 2026, but that was already the original view since going all the way back to 2023 anyways. And I shared with you, a liquidity chart back in 2023 telling you guys that yes, the market can run all the way up to, the point where liquidity constricts. Now, we did expect the market to top a lot earlier because, again, Bitcoin started to bottom in November of 2022. Typical timeframes, we would have already been topped out. But that's just simply not the case with liquidity changing, and drastic events can change the time frame on liquidity. So in my opinion, going into 2026, it seems as though things are improving greatly. I love the fact that we're getting data like this, because this data really does kind of change everything. And, you know, I think that 2026 is looking as though it's going to be a very bullish time for crypto, but also for, you know, additional markets as well. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely like, subscribe, so notifications on, because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.